NBC10 Responds, Maximizing Your Tax Refund. Sponsored by American Heritage Credit Union, celebrating 75 years of giving back.
NBC10 Responds is committed to helping you manage your money, and that includes your taxes. If you haven't gotten yours done yet, no worries. We got you. We're here at a free tax prep site. We're going to walk you through the information and the resources you need. Welcome to NBC10 Responds, Managing Your Money, Maximizing Your Refund. The refund. Everybody dreams about what they'll do with the money, or they say, I need that money right now. That's where refund anticipation loans come in. It can get money in your pocket pretty quickly, but there are some things you need to know before you say, give me my refund. The ads say you can get cash fast, often in 24 to 48 hours. Here's how. Refund advance or refund anticipation loans are loans against what you expect to get back from Uncle Sam.
Basically, the promise is that they're going to give you advance access to some of your refund money.
Ted Rossman is with Bankrate.com. He says tax preparation companies offer the loans to you before your refund actually comes in. They prepare your taxes.
So the idea is that they know your tax history and they can kind of predict what you're likely to get, and they sometimes give you some of that money in advance. It sounds great.
But Rossman says ask about fees. An offer of 0% interest loan doesn't mean the loan is free. You'll pay a fee for tax prep.
If you're paying them a tax fee that you weren't otherwise going to pay, that's kind of a fee for the loan, basically.
But if you were going to pay for tax preparation anyway, these loans might be for you. If you don't want to pay for tax preparation, there are other options.
There are definitely free ways to file, and you can do it through the IRS if you're below a certain income threshold. You can use other platforms like, there's a bunch of free tax software out there.
Also remember, if you don't get the full refund for some reason, you may end up owing more on that loan than you get back from the IRS. A lot of factors go into how much your refund will be. Every year, the IRS gives you a choice on how to reduce your taxable income. You can take the standardized deductions or you can itemize. And tax preparers say, choose wisely.
It's just a number that the government gives us that says, okay, here's your total amount of income, subtract this off, and pay tax on what's left.
Tom O'Sabin is with the National Association of Tax Professionals. He says the IRS adjusts the yearly standard deduction to keep pace with inflation. It's a flat amount based on your filing status, single, married, filing separately or jointly, etc.
Well, let's call it free money. It's a deduction that's going to reduce your taxable income.
This year, the standard deduction is $13,850 for someone filing as single or married filing separately. That's an increase of $900 from last year. Most people take the standard deduction, but O'Sabin tells clients before you do the math to see what the deduction would be if you itemized. Add up all of your itemized deductions before you make that choice. Those can include gifts to charity, interest you paid on your mortgage, property taxes, out-of-pocket medical expenses.
Let's see your actual expenses and then compare that to the standard deduction, and we take the higher of the two. You don't get both. You get one or the other, not both.
All right, those are the deductions. Now let's talk about the credits. They can put more money back in your pocket too. Let's start with the EITC, or the Earned Income Tax Credit. A lot of people are eligible for it, but some people don't know about it, so they don't file for it. According to the IRS, nearly 1 in 5 eligible taxpayers don't claim the credit. Last year, that credit averaged $2,541. In Philadelphia alone, 50,000 people missed out on free money. The Earned Income Tax Credit is a tax break for low or moderate income people, but often people don't claim the credit.
A lot of times people don't really realize, they think, oh, maybe I didn't make enough money, so I don't really have to file. And you're right.
For instance, a single taxpayer who makes less than $13,850 doesn't have to file federal taxes. But if you're single or head of household who worked in 2023 and made that amount or less, you're due an Earned Income Tax Credit. But you have to actually file.
If somebody owed you $600, you would be running after them.
Nakia Owens runs the Campaign for Working Families. The nonprofit offers free virtual and in-person tax preparation. Their counselors remind filers of this benefit.
I personally filed someone's return that made $2,000, and she was a single mom, and she walked away with like $1,100.
Here's who is eligible. You may qualify if you're single and make less than $17,640. Married, filing jointly, $24,210. Having children impacts qualifications too. Check out this chart and you can see it. For instance, if you are married and filing jointly and have 2 children, if you make less than about $60,000 a year, you could get a credit as much as $6,604. That brings us to the child tax credit. Jasmine Holston is with the Campaign for Working Families. They do a lot of free tax prep. Tell me about what people should know about the child tax credit.
Yes, so it's very important to realize that the child tax credit, there's 2 parts to it. There's a non-refundable portion and a refundable portion. The non-refundable portion's sole purpose is to reduce someone's tax liability. That is up to $2,000 per child. And then let's say someone who does not have a tax liability, that's the refundable portion. That's up to $1,600 per child. Also keep in mind the minimum income to receive it is $2,500. So have to at least make that much in earned income to be eligible for the child tax credit.
Great, Jasmine, thanks.
Thank you.
So now we've talked about the earned income tax credit, the child tax credit. There are also energy credits. Here's more. Energy credits can be traced back to the Energy Policy Act of 2005 that established tax credits for usually 10% of a consumer's cost up to $500. Fast forward to today, energy tax credits could be as high as 30% of what you paid, so it's worth taking a look. We talked with CPA David Lopez about what's covered under energy efficient home improvement credits.
So those are really the high efficiency heaters, new windows at your house, new doors.
Also included insulation materials, central AC, water heaters, boilers, skylights.
So you can have 30% of the cost of the improvements for the home improvement credits, up to $500.
The residential clean energy credits are different. They are 30% of your cost, but with no limits.
So that's for solar panels, wind turbines, anything that's what we call geothermal.
Whether you're claiming the residential energy credit or the energy efficient home improvement credit, you'll use Form 5695, but no receipts are required. Now to electric cars or EVs. You'll use Form 8936. Rules are different depending if you purchased your EV in 2022 and before or 2023 and after. The credits can be as much as $7,500. You could be eligible for a state credit in New Jersey. One final suggestion from Lopez and many of the tax preparers we spoke with: do your own homework when it comes to figuring out what qualifies for these credits. Now, you may also be owed some money from the city of Philadelphia in the form of a refund. Here's more.
This has been a longstanding policy that you need to be required to work outside of Philadelphia. So that's just baseline.
Rebecca Lopez-Chris is with the city's revenue department. She explains the refund is for people who work in Philadelphia, live outside Philadelphia, but were required to work outside the city. This year, the city has streamlined how people prove they were required to work outside the city per their employer.
What we've done is we've created a template that we ask folks to copy and paste on the company letterhead and have the appropriate person in your company sign it. And this is to standardize that language.
Someone from your company has to sign it. Another streamlined document, a template to figure out how much time you work outside and inside the city. And if you have questions, you should email the revenue department at the address on the website.
I want to set the right expectation that given the volume of requests that we get, that it's going to be a few days before we're able to respond, but you'll have your answer in writing. And I think it's just so much better than calling and waiting on hold.
And just as you can with your refund from the IRS, you can check the status of your refund from the city online. We will put all the links that we've been talking about on our website, NBC10.com/responds. Coming up, what you need to know about the scams targeting you and your refund.
Identity theft is real, and tax identity theft is real.
Plus, common mistakes to avoid when NBC10 Responds, managing your money, maximizing your refund returns.
NBC10 Responds, Maximizing Your Tax Refund. Sponsored by American Heritage Credit Union, celebrating 75 years of giving back. NBC10 Responds, Maximizing Your Tax Refund. Sponsored by American Heritage Credit Union, celebrating 75 years of giving back.
Welcome back to NBC10 Responds, Managing Your Money, Maximizing Your Refund. The IRS says there are common mistakes people make that will surely slow down your refund. We'll get to that in a minute. But first, let's talk about the free help available to get your taxes done. The Volunteer Income Tax Assistance, or VITA program, organized by the IRS, offers free help to taxpayers who generally make $64,000 or less.
It serves millions of people nationwide. The goal is to bring free tax preparation to people who couldn't necessarily afford to pay for it.
Stephen Balsam coordinates the two VITA sites run by Temple University, this one on the main campus and another at the Ambler location.
Volunteers are trained. They have to pass an IRS exam.
Last year alone, volunteers at Temple helped clients prepare 500 returns. Maya Manders is a student volunteer.
It's important for us to do what we do just because a lot of people don't get the opportunity to file or don't have the right information to file, so it makes it very tricky, and we're just here to make everyone's lives easier and follow the IRS guidelines.
You just don't know what you don't know, and that definitely applies to the tax code.
Balsam says their VITA sites serve anyone who meets the income qualification, and about a third of their clients are students.
It makes it so much easier, and it just takes 30 minutes of your time, so it's great.
They just signed me up for the online portal where I was able to see everything that they filed and also gave me a copy of it. So it's good to keep a record of it.
This is just one of dozens of VITA sites across the city of Philadelphia. This map shows a few VITA sites offered by volunteers from the nonprofit Campaign for Working Families. No matter where you live across our entire area, you can go to the IRS website, type in your zip code, and find a free tax prep site that's close to you. You'll need to bring proof of identification, your Social Security card, wage and earning statements such as W-2 or 1099s, unemployment, interest and dividend statements from banks. If you get your insurance through the marketplace, bring your 1095-A. Also, a copy of last year's tax return if available. And in order to have your refund be direct deposited into your bank account, you'll need to bring proof of a bank account, routing, and account numbers.
I would just say it's definitely better to come more prepared than underprepared. So if you are thinking about bringing a form or certain documentation, I would say bring it just in case, because it could be used for your tax return. Whether or not it's used, you still have it.
There's an online free option too, offered by the IRS, called Free File. You qualify to use it if your AGI or your adjusted gross income is $79,000 a year or less. On the IRS website, you select a company trusted by the IRS. Some offer free state tax prep software as well. Check out the requirements, and then you can get started. We'll put the link to free filing and where you can find somebody to help you free on our website, nbc10.com/response. Now, we've talked a lot about how you can get the most money in your refund. You know who else is looking for the most money? Your money? Criminals.
So right now we see an increase in tax crimes.
IRS Criminal Investigation Assistant Special Agent in Charge Jeff McDevitt walked us through the best advice for consumers to protect themselves from these crimes. Number one, if you hire a preparer, make sure they have a PTIN, a Preparer's Tax Identification Number.
That return preparer is required to put that PTIN, as we refer to it, on the tax return and also sign their tax return.
Number two, make sure you get a copy of your return. 3, stay away from a preparer whose fees are based on the amount of your refund.
You want to have your refund deposited into your bank account, not your preparer's bank account.
Number 5, never sign a blank return. 6, be wary of emails or texts.
You may see emails or text messages that are claiming to be from the IRS, but they are not. These messages are fraudulent. They may contain malware. They may compromise your personal information.
7, be wary of calls too.
IRS is never going to call you and threaten legal action, especially like an arrest or any type of that action. These phone calls are fraudulent. And if you get one of these phone calls, do not engage with the fraudster, just simply hang up.
Number 8, File as soon as possible to prevent someone who has stolen your identity from filing to get your refund.
But if you find your refund is held up because of identity theft, you can go to irs.gov, and there's an identity theft affidavit on there and directions that you can fill out and submit to the IRS, and they will help you get your refund.
Let's talk a little bit more about scams. Andy Good with the Better Business Bureau is joining me. Tell me about the 4 major scams that people need to have on their radar.
Sure. So we've identified 4 types of scams. One is the imposter scam. We also have the tax ID theft scam. We have an email scam and also the mailing scam. And so the first scam is the imposter scam, and that's where the IRS calls you and says you either owe more money or you're due a refund. And when they say you owe more money, what they're trying to do is extract money from you by having you send a gift card, send Venmo, send a wire transfer, or some other form of transfer that they can't, that you can't retrieve back when you find out that it's a scam. The other form of the imposter scam is when they tell you you're due a refund. And then what they're looking for is just information from you. What are your bank accounts? What's your address? They're trying to fill in some gaps in their records on you. These scam artists already probably have some records, and they're trying to fill in gaps and get more information so that they can steal your identity at a future time.
Let's talk about the email scam,
Sure.
Because people really need to understand that if they get anything in the form of email that looks like it comes from the IRS, it's not from the IRS.
No, the IRS won't email you. What they're first going to do is send you a letter explaining any deficiencies or any issues with your tax information that they need. And the only time that they're going to contact you in a form other than mail, you'll have already received a piece of mail. So if you haven't received a piece of mail, don't respond to the email. It's probably a scam. Ways you can identify that: check where the email came from, look at the address, make sure it looks like a real, true irs.gov email address. And still, if you're in doubt, call the IRS, because they'll let you know. You can get a lot of information from them directly, and they'll be able to point in the right direction.
That's really good advice. Thanks for joining us.
You're welcome.
Now let's talk about the mistakes we make that can slow down your refund.
The first thing to do is always look at last year. Let me tell you, that's what the professionals do. We always look at last year's return to be organized for this year, and then ask questions what might have been different. Did you get married, divorced, have a child go to school?
Tom O'Sabin is the director of tax content for the National Association of Tax Professionals. He says after you review last year and look for changes, look at your deductions, the standard deduction and your deductions. If you itemize, whichever number is bigger is what you will choose. And check your return for accuracy.
Number one mistake, math, a math error. So my advice would be use a software. There's a lot of good software packages out there, but like anything else, when you run through the software, the old saying in the programming world is garbage in, garbage out.
Check all of your numbers, your social security number, your bank account number the IRS will use for your direct deposit, and make sure you sign your return. And O'Sabin has this warning if you're working with a tax preparer.
If you're providing information to a professional, I'm amazed at the number of people that will attach their W-2s and their 1099s, guess what, to an email. They'll just go ahead and attach it. Ladies and gentlemen, that's not safe. That's not safe at all. Most professionals will use a portal.
Make sure you use a portal with encryption or two-factor authentication. And if you're going to take all of your documents to your tax preparer's office, O'Sabin says make sure you take them inside the office. Don't leave them outside. Now to audits. The word audit strikes fear into the hearts of most people, especially at tax time. We wanted you to know the facts about audits and the best ways to avoid one. Here's the reality. The IRS audits very few returns. In 2022, 3.8 out of every 1,000. They have software that compares your return with others. Certain things on your return could trigger an audit. We went to Joy Taylor, the editor of Kiplinger's Tax Letter, for more details.
Just because the IRS doesn't audit many returns at all, that does not mean it's a sort of free-for-all for, for taxpayers, because there are items and there are situations that can cause your return to have a higher chance or higher risk of audit.
Taylor says failing to report taxable income is a big red flag, but
In most of those cases, it doesn't actually lead to an audit. Instead, the IRS will send you, in many cases, a letter or written notice saying, we noticed that you did not, you didn't report, let's say, this amount of dividends or something.
Remember, employers and financial institutions report to the IRS, so what you report and what they report needs to match. Taking higher than average deductions or credits can get you flagged. If you claim the standard deduction, which, by the way, increased this year, you'll be fine.
They're looking instead, for example, if you itemize on Schedule A and you are taking large deductions, especially that are disproportionate with the income that you're reporting.
Likewise, the IRS software will see if your charitable deductions are out of proportion with your income. Joy also added this reminder: most income is taxable. Coming up, a last-minute tax warning and what to do if you just know you will not make it by the deadline. Plus this.
I'm done. I got my refund already.
How do you plan to spend your refund?
Well, I tell people, spend it on something that you normally wouldn't spend it on. Do something nice for yourself. Enjoy it.
I typically get a refund. My fingers are crossed. That will be the same this year.
We get expert advice, plus exactly how you can check on the status of your refund.
NBC10 Responds, Maximizing Your Tax Refund. Sponsored by American Heritage Credit Union, celebrating 75 years of giving back. NBC10 Responds, Maximizing Your Tax Refund. Sponsored by American Heritage Credit Union, celebrating 75 years of giving back.
Welcome back to NBC10 Responds, Managing Your Money, Maximizing Your Refund. Now, if you're saying, look, there's just no way I'm going to be able to get this all done by the filing deadline of April 15th, no worries. You can file an extension.
And the biggest error that we see, if you do file an extension for yourself, that's only an extension to file your return, not to pay.
So, if you need more time, you file an extension request. That'll give you until October 15th to get your return in. The extension request asks you to estimate your tax liability, or how much you owe. If you think you owe, you can pay online. Remember, you'll owe interest on any tax not paid by the deadline.
So if you think you owe a couple dollars just because you filed an extension, you don't get extended to pay, you still have to pay by April 15th. Just means you can file up until October 15th with no filing penalty.
Now, if you're pretty sure the government owes you money, just file for an extension and then you have until October 15th to get that return done. But if you're waiting for a refund, why would you want to wait that long? The refund's the best part about tax time. The question is, what's the smartest way to spend that money?
I typically get a refund. My fingers are crossed. That will be the same this year.
I just get so excited for having like a lump sum of money that is like a nice surprise.
If you too are expecting a refund, you may be thinking, maybe dreaming about what to do with that extra money.
Well, I tell people, spend it on something that you normally wouldn't spend it on. Do something nice for yourself. Enjoy it.
I've used the return to pay down maybe credit card debt.
I think it's important to treat yourself and balance that with the responsibilities of the things that are coming up in your life.
I think the most important thing to do before that money even hits your account is to think about what your goals are.
We talked with Shannon Robinson, a credit counselor at Clarify, for advice.
So you might want to focus on decreasing your debt, okay? Maybe you want to purchase a home or a car or any other big purchase that you have coming up. Then you might want to take that money and put it directly into a savings account.
According to a survey by the National Retail Federation, 48% of people plan to add to their savings account. 34% plan to pay down debt. Robinson has strategies if you have credit card debt.
My advice would be if you have anything with high balances, to start paying those off first. Another thing you can do is look at your credit cards that have the highest interest rates, because if you pay those off first, then you're going to be saving yourself money in the long run.
That same survey showed the other plans people have for their money, and that includes the splurge.
You just have to decide whether or not what your goal is more important than that splurge. And some people might say, you know what? I don't need this thing that I was thinking I wanted.
So now you want your refund, right? The IRS says if you filed electronically with direct deposit, your refund should be in your bank account within 21 days. If you filed by mail, it'll be much longer. You can check the status of your refund on the IRS website, Where's My Refund? It's updated once a day and will tell you the status of your return: received, refund approved, and refund sent. We will put all of the information, all of the resources, all the links on our website, NBC10.com/responds. We're here to help. Count on it. Thanks for joining us for NBC10 Responds, Managing Your Money, Maximizing Your Refund. I'm Tracy Davidson.
NBC10 Responds, Maximizing Your Tax Refund. Sponsored by American Heritage Credit Union.